Good morning, everybody. Kamari Ellis here. Wanted to come to you live real quick to talk about the Lyft IPO. I want to date this recording because today is March 29th, 2019. This is the first day of trading for the Lyft IPO. And before I get started, let's go over what an IPO is. An IPO stands for Initial Public Offering. Okay, initial public offering basically is the phase in a business life where a private business becomes public, where a private business becomes public and the public can actually have an opportunity to buy ownership in that business. There's a whole process for it. We've seen a whole lot of them over the years. They tend to be very popular. For the record, right up front, I am not a fan of IPOs for individual investors, but I still tend to cover these because they're really good. Well, because people are interested in them, just to be totally honest with you. People are interested in IPOs because it's the new hot thing on the market. It's the thing that everybody's interested in. It's like the prospect of buying a brand new car. Nobody cares about the old car. Everybody's interested in the new car, right? So, that's why IPOs, again, initial public offerings, are very interesting to people. As it stands right now, Lyft was supposed to start trading at 9:30 on the NASDAQ exchange. And my last update shows that Lyft did not start trading yet. So that's not a good thing, usually, especially on the first day of trading. Um, I wonder why. I could only speculate that maybe there's not enough buyers to kick it off, or maybe there's too many sellers. I'm not sure. But one of the reasons, before I get into this, one of the reasons why I don't like IPOs for individual investors is because the IPO usually, all the work, the legwork before that, and all the selling and buying before that, um, people are buying these shares in the private market before they come to the market. So everybody was talking about Lyft and how they were going to IPO at $72. They're IPOing at $72 to the big banks, the previous investors, the venture capital firms who had previously invested into Lyft. Previously, they already had money invested in them, their employees, and those special groups that the banks and brokers have access to, who were selling these shares to. So usually by the time they hit the market, there's usually a large premium. Now, you might not see that as much with Lyft this go around, only because they increased their starting price of $72. So I think they were doing that because they're trying to get all the juice out of the market, so to speak. They are the first ones out of this whole Lyft Uber competitive race that they're in right now to go live in terms of IPO and to launch on the stock market. So it's really, really interesting to see what's going on. So let's just jump into it, all right? Because I do want to do a review, go over the basics and the fundamentals of it. So again, Lyft does 30.7 million rides. They did 30.7 million rides last year. They had 1.9 million drivers. Average ride per driver is about 16 rides. So, we always hear those stories about the guys and gals who were driving around, Lyft and Uber, making a whole bunch of money. But usually they're in their cars, anywhere from 8 to 12 hours a day, depending on city, locale, and any other special events that might be going on. So you're doing about 16 rides per share per driver. Again, that's an average. It's not a whole lot. It's about 1.2, 1.3 rides per month. But I'm sure there's a whole 80-20 effect where, 20% of the drivers are probably generating 80% of the revenue for the company. All right, so Lyft did $2.2 billion last year in revenue. Again, $2.2 billion last year in revenue. They're valued at $24.3 billion. Again, $24.3 billion. And if you're wondering why I'm looking down, I'm looking over the notes. All right, I couldn't retain all this in memory. It's a whole lot to retain, and I got a whole bunch of other numbers running through my head, especially since it's tax season. So $24.3 billion, and that's at the current price of $72. And like I said, the trading still has not started. Now, they made $2.2 billion last year, but they had a net loss of $911 excuse me, 911, excuse me, $911 million. So roughly almost half of the money they made in revenue, they lost. If you don't understand revenue and losses. So revenue is all the money they brought in. So they brought in 2.2 billion. And then roughly they spent about $3 billion all in. So that's why they have a loss. Now, not to fear, they have plenty of cash because they have a lot of capital injection or a lot of investment from venture capital firms. Now, one thing to note about this, they're selling 2 shares of stock. They're selling Class A shares and they're selling Class B shares. Your Class A shares are 1 vote per share. Your Class B shares are 20 votes per share. And let me back up. They're not selling 2 shares. They have 2 shares. All right. So again, they're selling the Class A shares. So those shares only have roughly 1 vote per share. They're going to reserve basically the Class B shares for ownership and upper management. That's how they usually do it. That's a trick and technique a lot of firms have been deploying lately to make sure they always have control over their corporation, over their company. Many times you can have what they call corporate raiders come in, take over, and kind of oust people out of the company, oust the founders out of the company. And this is a technique that they use to make sure that they have leverage in terms of votes to control the company. Now, Uber is looking to raise this money because they're looking to increase working capital, operating expenses, handle some of their tax withholdings, and also settle out some of their outstanding stock and some of their RSUs. So my people out there who are familiar with RSUs, they're called restricted stock units. They're a type of a stock option that they give to their employees, basically compensation for their employees being on board with the team, working with them for, however long time. It's a show of value. It's a show that they're vested into their employees to give them an equity stake or ownership stake in the overall company. So that's pretty interesting, the way I see it. One thing I found interesting was that Uber is also offering some of their drivers, Lyft. What am I talking about? Lyft is offering some of their drivers a cash bonus of $1,000 if they have 10,000 rides or more, to give them a little cash to buy the stock. Now, this was a whole big thing because Lyft drivers are technically independent contractors. And there's been this whole back and forth going on for years about, are drivers employees, are drivers independent contractors? Per the IRS standard, they're independent contractors. They go to work when they want. They work how long they want. They work where they want. They use all their own materials to do it. The IRS and the Department of Labor had this whole test. There's usually 3 major points of how to determine an employee versus an independent contractor. But oddly enough, many times, some of the Lyft drivers, some of the Uber drivers also want to be listed as W-2 employees. For the life of me, I don't understand why, but that's the case. But I bring all that up to say is that Lyft wanted to look out for their drivers who basically helped them establish themselves and become successful in this whole ride sharing space. So they gave them $1,000 if they had 10,000 or more rides on their platform. Actually takes a whole lot to get 10,000 rides. 10,000 rides is, you probably couldn't do it in 1 year. That's roughly 27 rides a day, unless you're in like a super busy market. So these are for those who have been on the platform probably for at least 3 years or so, give or take, because that means you wouldn't be taking any days off with that 27. So that's 10,000 rides divided by 365. That's averaging 27. So this is for their diehards. This is for the people that have been with them for quite some time. Now, again, I tell everybody I am not a fan of IPOs because for individual investors, because they usually get ripped off 9 times out of 10. But when I look at the revenue of Lyft, it tells a very interesting picture. So in 2016, again, I'm looking down because I'm reading from my notes, but in 2016, they made roughly $343 million in revenue. 2017, they did roughly $1 billion in revenue. In 2018, they did roughly $2.1 billion in revenue. So the company is growing. They've had losses every year, though. So in 2016, they had a negative, a loss of $682 million. In 2017, they had a loss of $682 million. And in 2018, they had a loss of approximately $211 million. Now, I find that interesting because revenue is growing faster than losses. Revenue is growing faster than losses. And that's never a good thing. I mean, excuse me, that is a good thing, especially for brand new companies. But the case with these new IPOs is that people are always wondering, when will they become profitable? Because ultimately investors buy stocks because they want to buy into a profitable company. Typically, profitable companies tend to have increasing share price, or will at least pay back a dividend at some point. Now, the other thing I find really interesting about Lyft is they have a very, very safe and sound balance sheet. What is a balance sheet? Balance sheet just basically calculates what are your assets, what are your liabilities at any given time, to say, hey, this company is viable. This company is not going to go out of business in the short run or the long run. But, it gives you an idea of how well they're doing. For example, if you have bills of, let's say, $10,000 in a month, but you only have $5,000 in cash, you're not doing too well. So that same principle applies to business, to companies. So they have total assets of $3.7 billion. And they have total liabilities, and liabilities are money that are owed out to people, of 1.4, almost 1.5 million. And so I looked at this and I said, all right, I want to apply what's called the current ratio. And the current ratio is just an accounting/financial analyst term that people use to analyze the health of a company. So when you look at this, when you divide your current assets by your current liabilities, and so when you divide it, it comes out to 1.6. So they have a current ratio of 1.6. Usually anything over a 1 is good. Anything beneath a 1 is bad. So they got 1.6. They have a lot of cash on hand. Some other really interesting things is when I look at the board of directors, they have two names that really stand out to me: Ben Horowitz and Valerie Jarrett. Now, Ben Horowitz is the founder of Andreessen and Horowitz, which is a venture capital firm which has also invested in Lyft. Usually what happens is venture capital firms will invest in companies, but they will also get board seats to help direct those companies as well. But Andreessen Horowitz has a wonderful track record. So these are some of the companies they have invested in: Airbnb, BuzzFeed, Coinbase, Facebook, which we're all on right now, or Instagram or YouTube. Well, YouTube I'm not on yet. Foursquare, Pinterest, and Walker Co. What's Walker Co? Walker Co, if you've ever paid attention to the guy by the name of Tristan Walker, or a product called Bevel, he makes shavers for people of color, or he provides hair care and health care for people of color. Bevel just so happened to be one of the first products. So they have a long track record of being very successful. So having that kind of intellectual capital on the board, to me, is very, very important. It's very, very good for the overall life and trajectory of that company. Then the other person they have is Valerie Jarrett. And if you aren't familiar with Valerie Jarrett was President Barack Obama's senior advisor. Basically, everything ran through her. So they have great business acumen on the board. They have great political acumen and access on the board, along with many of the other people who have invested in this company as well. Now, many people don't realize Lyft is actually older than Uber. Lyft started in 2007 as a company called Zimrod, and then they wound up changing their name to Lyft in 2012. But they basically started by having college kids take long rides together back and forth to college. That was the big thing. So they kind of did ride sharing. They kind of revolutionized that or started that. The difference between Lyft and Uber is Uber started with kind of the black car, and that was more prestigious, more for upper echelon type folks when it comes to working and social economic status. Lyft didn't really get into to what they call true ride sharing until they started their Uber X platform. Uber also expanded internationally faster than Lyft did, but I like Lyft better than Uber because Lyft's culture has not been rife with as many, let's say, issues as Uber's has been. I don't know if you remember the CEO had plenty of issues, cussed out an Uber driver at one point. There was a whole issue of sexual harassment in the culture at Uber. They brought in new branding people. They brought in a new CEO. So they're turning it around somewhat. I mean, Uber's here. Uber's still number one, but Lyft hasn't had any of those things. So, there's a saying that culture eats strategy any day of the week. Culture eats strategy any day of the week. So if your culture is sound, or let me back up. If your culture is whack, if your culture is out of sync, if your culture isn't positive, doesn't matter what kind of strategy you have, because your culture will eat away at that strategy and will take any benefit away from that strategy that's possible. Lyft, however, they move a little bit slower, but they tend to have a more holistic, like family-like structure. Now, as much as that's possible in any big multi-billion-dollar place. But again, they haven't had those same kind of issues. And I believe they haven't had those same kind of issues because they've also grown slower. Sometimes slow is better. It doesn't always make sense to try to grow super fast out the box. Sometimes you got to walk and get your legs up underneath you before you can start running. But again, third time I'm saying this, I am not a fan of IPOs, initial public offerings for individual investors. I'm also going to say this. Nothing I say on this video indicates that I'm giving you a recommendation to buy or sell Lyft. This is for entertainment and educational purposes only. Please don't come back and say Kamari told you guys to buy Lyft, because that's not what Kamari is saying. Actually, what I would do is I would watch. I don't believe in buying IPOs on the first day that they launch anyway. And last time I looked, the trading was halted anyway. So basically, they haven't started trading on the NASDAQ quite yet. Let me update and see if anything's changed. It doesn't look like anything's. Oh, well, it's not halted now, so it means they should be trading. So we should be able to see what some of the prices are coming in at. But I don't believe in buying IPOs in the first days. If you remember Facebook years and years ago, I want to say they debuted at around $22, jumped to like 30, and then they fell down to around 16 or 15-ish. And then now they jump back up, right? So, Facebook is still a good company, but it wouldn't have made sense to buy on the first day. It didn't make sense at all. So I would suggest, if you find this company interesting, I would say wait a couple of days, wait a couple of weeks, and then come back and then buy if you think it's attractive. I would say, evaluate it, see if it makes sense to you, see if it makes sense to you and your overall portfolio mix. Your portfolio mix should be in alignment with whatever your goals are in life. So, for example, if you are saving for retirement, this is a long-term play. Don't expect to get rich with this overnight. Like I said, Lyft isn't even profitable yet. Now, just because they're not profitable, this is a little nuance here. Just because they're not profitable doesn't mean the stock price won't go up. But I would not get my hopes up to do that just yet. I would, like I said, I would wait. I would evaluate it. I would see how the market takes it, or responds to it rather. And then I would think about possibly buying or committing your money to it. Because listen, you work hard for your money. You want to respect that. You want to respect the time and effort it takes you to make your money. And then you want to make wise investments. If anybody is interested in learning more and increasing your financial IQ, please go over and join the Finance Rebel Academy. Join the Finance Rebel Academy. One of the things that we just started doing was we started a financial book club. I find that many times people are intimidated by finance, intimidated by learning finance, but it's a little bit easier when you got other people to do it with, right? People tend to excel better when they're in groups. So I said, hey, well, let's try a book club and we can start talking about some of these financial issues and learn about financial issues as we go along. And we've had a couple book clubs, and it's really helped. It's really helped to open the eyes of a lot of people about where they're at in life and their financial status and where they want to go and how they need to tweak and make some changes in their overall financial strategy and actually their overall mindset strategy as well. You need a mindset strategy as well. Like, we're bombarded every day with negative propaganda, negative BS stuff that's floating out in the zeitgeist. You got to be able to fight that off as well, because, you know, that will keep you in a non-productive or depressed state also. So, you know, in order to stay positive, you got to work at keeping in a positive environment around you and adjusting positive things. You know how they say we are what we eat, but we're also what we read. We also are what we watch. We also are the conversations and dialogues that we have as well. So if you're interested in having some more financial dialogues, just type Financial Rebel in the search box on Facebook, or I'll drop it in the comments below, description below, and come on and join us and let's start dialoguing about financial things. If you have any questions about the Lyft IPO, drop them below, or any questions about finance or the stock market or taxes or anything like that, drop them below, and I'll be sure to address them either through a video or maybe I'll contact you personally. But for everybody, thanks for watching. I appreciate you joining me. Everybody have a great day. Kamari Ellis out. Later.